Video on support and resistance kind of, and how a lot of the time I try to find stuff. And so I'm going to start out first just showing you a couple little things I think that you should know, and then I'm going to try to go over some charts. And this will probably be a long video. Support and resistance is a hard thing I think to just learn, but I'll try and go through it and explain it as much as I can. Alright, so I just wanted to say, for instance, like if you have a stock that is going, and for instance, we saw this pattern in the SPY recently, shot up. Like that day, there was a 1,000-point rally. Shot up, went down, and then it just did like this. And I think the pattern actually was like it came, had a gap down day, went up here, and then went, and then the next day we started above this line. And then we took off, now we're at like 260. So support resistance lines are about noticing places that are significant, noticing places that are important where the stock usually bounces. Because people wake up and they see that, hey, every time this thing reaches 260, it sells off. Well, then when it reaches 260, if everyone thinks that, it's going to sell off. So you're finding stuff that is significant. So for instance, on this stock, you would want to be able to recognize that once it got up here, you should have been able to recognize as soon as it went up here that this rally stopped. And so you would want a line there, like a horizontal line. And that horizontal line would just come from the fact that it had went up and there was a rally. And there was a rally where it went up, and this was the end of that rally. That should tell you from a huge rally on like a 1,000-point day where it stopped, that is going to be extremely, extremely significant. And so it went back down and formed a bottom. But it didn't break back down into here, into this level. And so then your next level would be right there. And then you can just draw a horizontal line on that. And of course, it's just a drawing, but I'm just trying to kind of show you how you're supposed to be able to do this. And so you want to recognize significant levels. And then, and this I'll show you in the charts in a little bit, since this was where the gap started, that would be a very important line. The next line, or where the gap was and where it started, those are two very important places, because it broke into it and then went up and filled the gap and reversed and came down. And on the next day, look, we broke out above it, and so you have a lot of bullish momentum and it runs. But this kind of pattern happened right here, and you want to recognize that the rally stopped, significant point, came back down, significant point where buyers came in, and it bounced around the whole time. This happened on the SPY. That's one of the things that you should be able to realize. And anytime you have a gap in a stock where it goes, like this, that's a gap. So this would be a significant point, and this would be a significant point. That is what you're looking for. You're looking for significant areas. And just because a stock breaks it doesn't mean it's significant. Like if you have one that's going up and it goes like that and then breaks above it and comes down, kind of tests it, and then goes like that. This point right here, this area, is hugely significant because it tested it, broke above it, came down and tested it as support. It's not resistance anymore, it's support because it's above it, and tested it and then went. You're looking for significance. You're looking for, like, think if you were I don't know, like maybe if you're on a plane or a roller coaster, like the turning points that you would remember, maybe. I don't know if that's exactly right. But like you would remember that big drop off. Wherever this rally started would be one, for instance, that big takeoff. You went, then you would remember this huge turning point right here. Okay, so I guess the roller coaster maybe wasn't a great example, but you're just looking for significant areas that get tested over and over and over again. Gaps are always significant. All right, so I'll go straight into some of the charts and show you what you're looking for. So that's SPY, for instance. Well, today nothing really. It was pretty flat most of the day, but for instance, what would have been like easy on the other day, like I told people, I don't know how many times coming in, that 260 was probably going to sell off. It was the first time we were testing this level, and it was a huge psychological level. So where did 260 come from? Well, if you go out on the 3 month, this is much easier to do it not intraday, but you need to go on the 6 month to see it. So what happened with the SPY? If you remember correctly, we had these 2 huge sell-off days, and then it kind of looked like maybe a turnaround. Those days were still red. Then we had these 2 green days, and they stopped. And where did they stop? They stopped at an important point. They stopped right there. All right, and I guess the top of it was right there, which was a predictable level of where the top of that day would be and the wick of that day would be. Either one of these is just a very small difference that is very significant, because you had these 2 huge sell-offs and then the rally stopped. And so these people that are all having fear and panic, they realize that this is a big turning point. That's where the rally stopped. And so then the selling starts again. And it goes and goes and goes, and where does the selling stop? Well, it comes right down here in the middle of this day, and then that's where the buyers come in. And then there's a rally, and it goes back up at that same point, and it sells off. It goes down, and buyers come in a little earlier. It doesn't go all the way down to the wick, but where does it go? It goes down to what is usually more predictable, the body of the candle. Right there, the lowest body of the candle is that next important point. And this will, I'm sure that you'll see, we'll have trouble probably at this level whenever we reach it. But so anyway, that point, though significant, it came back up, sold off, came back up, sold off. And then once this level broke, and especially 260, once both these levels broke, it was just, we sold off every single day. And right here, we tried to have a rally and came up, and I guarantee you that was shorts that jumped in. And of course, I'm sure it was some people selling too, but I guarantee you shorts jumped in. We went back up towards 260. We just had all these red days in a row once 260 broke. So that tells you how significant that level was. Comes back up, and we're having trouble just getting to it. And then on the first day, that's the reason that why it went up to 260. I shorted it the first time, because the first time you go towards a level like that, it's very, very hard to break it. I just want to show you too that if you go to the left and look at this like 280 level, the sense doesn't really matter when we're looking. I mean, if you're looking like swing this thing, which is the type of candles we're looking at, you're not going to be worried about cents, you're worried about dollars. But this level, of course, has been played on there. It tested it, and broke it. And then you can see a lot of these levels actually in play. But it came back up, and that's where it broke down, and these red days started. And this is actually exactly on 280. Well, on 280. This is where it broke, and then all this selling started. And then it goes back up, didn't get to it, and then it goes after it again, and then all the selling starts. Significant level in the past, and then of course a significant level in the future, and very significant, tested over and over again. And then, just a day ago, when we went up to it, we were way, way overextended. I know we have this huge level, 260. And so as soon as it touched 260, I bought puts, and it sold off super fast. We were very, very extended right here. And so that's how you knew that level was important. So let's go over here. So if you're looking right here, what would you see? And you're not always going to get every single one of these moves right. I'm just going through this video. I've not really prepared anything. Not all of these are going to be perfect, and they do get broken. Your point is to predict what high probability, once a level either breaks below or breaks above, where's the next level it's going to go to. And you can play those probabilities, and that allows you to make a profit. And so you have a gap. So where are your levels going to be? All right, well, you're gapping down. So your resistance level that you're shooting for is going to be up here, because that's where the gap was, the body of those candles. And so down here, you have this opening candle before the reds. You want to see if it breaks back above it, right? So the body of that candle. That's going to be the next line you're looking to break. All right, and so we sold off. So it would look like a red day. And you can go to the 5 minute here. Oh, is it going to drag me over every time I do this? And you can see that little pattern of a nice reversal. I'll go back to the 1 minute. But so that's where you would put those. You're always looking for gap fill plays because they're easy to play. And once we broke back above it, it went, and it kept going the whole day pretty much. And then we reached this point where I said intraday, do not, make sure you pay attention to 258.23. Where did I find 258.23? By looking to the left of the chart. I want to look, that is how you read the charts. You're looking to the left to find the next significant point. And like I said, this day wasn't perfect. We broke into the gap and we gained bullish momentum, but the gap did not get filled. But 258.23, well, if you're looking over here, you can see about there, or 2.5 if you want to round it. I said 2.3, but we sell off at this level, we break above it, and the body of that candle starts right there, and then we test it. We test it, and we test it. And we go up here. We break down below it, and you can see it test right there, and then it sells off. Test it, it tests it, it tests it, it breaks above it, test it 2 times right there, breaks below it for like a minute or 2. It tests it, breaks below it for like a minute or 2, comes back above it, tests the level, goes back above it, comes down, and it's just testing that level right there pretty much that whole time. Comes back above it, breaks down, tests the level, and then goes. That level was significant in predicting a lot of places where buyers jumped in the whole day. Once it got above it, it obviously played out. And so if you just draw a line right there, you're of course, what did I say, 2.3? You're going to see that would have predicted most of the moves where buyers come in. Like I said, it's not perfect yet right there where it broke down below it. And you could tell that sellers jumped in right there. But then we got back above it. That predicted where buyers came in over and over and over. And so we come up on this day. And what do? Well, we sell off that level. We never got back above it. Alright, so let's see how far will this thing let me go. Okay, well, this chart is not going to let me go super far. Okay, well actually here's another day. Alright, so we'll erase all those lines because now we're looking, so we are looking, I'm going to act as if we're looking to the left of this chart. So I'm going to like if we were in time, we are right here. That's where we are in time. And so we're looking to the left of this chart to predict what is going to happen to the right of this chart. And so left, what do you immediately notice? Well, we had a place where we opened. We have the body of this candle, and it kind of sold off from it. So you want to see if we break back above it, like a confirmed break above it. All right? And so where would you draw that? I usually draw my line like right there, top of the body of the candle. Alright, and then we got our target for the gap that we're looking to see if we can fill. And so that's going to be where it dropped off from the day before, right here, the body of the candle. Well, had it on it, body of the candle, alright? And so then if you look to the right, right, so what are we seeing? We saw this little reversal pattern right here, and we broke above this right here. So you would think, maybe we go long. I don't know. And so then you see that reversal pattern. You can tell it's about to probably reverse. It comes down. You can see the body of this candle rests there. The body of this candle starts there. And that's a huge sell-off. And you see the reversal pattern right there. So you're like, well, gosh, are we ever going to break into the gap? Is this thing going to take off? And then it does. Breaks into it. You see kind of that reversal pattern. And then, of course, you see this right here. And this is really, really good right here where you break above it and you come back down and you test your support and it holds. That means that the stock went up, and when it came back down, people thought that this was a good time to buy. You got to think about, you're trying to predict what millions and millions of people are doing, so you want to understand their psychology. They broke above, this thing went above this level, and then at the level that you predicted from earlier in the day, 257.72, when it came back down, buyers jumped in. Other people were willing to buy there. That tells you that you were right about predicting that level. And since it came back down and buyers jumped in, then it goes, then it fills the gap. That is the best thing you want to see, is it break above the level, come back down and test your line, and then go. And then of course it filled the gap, not to almost to a cent right there. And so you have this line that you just drew from where the gap was, and then your opening candle, you can play a good portion of the day. And you're gonna, I mean, I guess if you're not looking for the test and go, which is the most bullish sign, then you would have taken a loss right here, but these gains would have more than made up for it when it broke out above it. And then of course, that's where the day closes. It closes up at this gap, that strong resistance. And if it, guarantee if it broke above it, you would have seen it go a little bit. But so that's another day, another way that gap fills are important. And just a little like saying, right here, while I noticed this line, like you can see this line being tested out in the past. That's probably why that line was important. You can see it rest there and test there. I mean, it looks like, and the hard thing is because these don't always play out perfectly. Like your resistance line played out perfectly. This line did not play out perfectly. You had a mishap right here where it wouldn't have worked perfectly. It worked good the second time, but the first time it didn't. And so it just looks like if you take these away, a bunch of candles, you know, and you can't predict, so people think you can't predict anything. But when you put these lines in and you know where to put them, like for instance the gap fills, which are the easiest, then you can play this thing, just the top of the body of this candle right here, to see if we break into it, and that predicts a lot of these moves. And then we went back up and we filled it in reverse. You have a high probability of filling the gaps, and it reverses. Let's see. Oh, this thing won't let me go over further anymore. But that's kind of how you draw those lines and how you play them with gaps. Let's see. Amazon didn't do anything on that day. On this day, you can see, so where would you had it? It didn't come into play, but where would you had it? In case it did, you could have had your line right here on the body of that candle. That's a wick. It's not the body of that candle, so you don't want to get caught and die on one of those or lose money. But that's where you would have had your targets. You would have expected, if you would have seen this thing break, like a confirmed break, not a wick, but like the body of a candle maybe, break into this, high probability you would have wanted to go short, looking for this to fill, and then you would have taken profit right here. And all you do is you don't really even have to be right, because it's not just going to break above this level and fly. I mean, you have like, not long, but maybe 30 seconds, a minute or something. Like you go short here, and if it gets back above that line, you get out. Since these are support and resistance lines and you draw them correctly, usually the stock's going to rest at them for a little bit. Like I said, maybe like 30 seconds or so. It's still kind of fast, but unlike these levels, it's not just going to it's just going to do like this and like fly. Usually it'll rest at those levels. Okay, and so here, like you were looking for the gap again, but you didn't get it. You just have wicks. And so I always draw like at the body of this starting candle. And I've been doing that for every one of these so far. So right here, body of this starting candle, that kind of predicts where the low of day was, where the buyers come back in. That's why it's good to do that. And then this would have been your target. It didn't ever break into it. I guess right here, actually, it did break into it and go. That would have been a very hard move to catch. Let's see, this will go down to the 1 minute and see how this actually looks. Okay, so that's not all wicks. My bad. That actually wasn't. It went back down there on the 1 minute. You could have captured most of that move. It wasn't perfect to the cent, like I said. But that's how you play those, is you're looking to go short when it enters it, and then collect profit down here. You would have mostly predicted the move, and so you would have taken, I would hope you would have taken some profit when you've seen that giant green candle and you're short. But anyway, we're just going to focus on drawing the lines. I like to use the 5 minute. The 1 minute would have worked better for that move. But this is kind of the support where buyers came in. That's why it's a good place to draw that on the first candle of the day. Let's see if there's anything else. Like I said, I'm not going to be able to predict every single move, but you want to be able to predict as much as you can. You can kind of tell. So what would you have seen if you were here and looking at this stay, right? Well, you would have seen, where's the significant point? So, well, in the past, you had this gap fill right here. So let's see. Did that do anything? Well, we kind of rested at it right there. Kind of rested at it right here. So you have like a little level you're above it. And so this stay, if you were right here in time and looking at this stay, you'd have seen the high day from the day before. And so you'd have placed something at that. That would have been a significant point. And so once it broke above this level, your price target would be right here. And then you would get out. If you're long, you could also go short at it. You're just looking to see when it breaks above it by like a cent or two, you're looking to see, okay, if this thing goes short, since that was the high of day, I expect that buyers aren't really going to be here above that price. Like I said, it's not always going to work to a cent, but you can go short right there. You can see these candles rested on it. So that's how you tell it's right. It's not perfect, but it was tested a lot, more than not. But, of course, the easiest play, I can't stress this enough, is playing like the gap fills. So if you'd have woke up on Amazon and you were right here, what would you have done? Well, you'd have placed it, since it was red, on the body of that candle right there, and you're waiting to see if you're going to break out above that candle, all right? And so you did. It rested on it right here, it rested on it, and then it broke out above it. Test, 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 and go. Remember how I said earlier, if you break out above it and it comes down and tests it, think about psychology. It means that at this price, 1615, once you broke out above it, when you came back down and tested it, people didn't get scared this time. Buyers came in. You're thinking about the psychology of the millions of people watching this stock. All right, and so that line, you place it from there. And then your target, of course, if you'd have been awake in the morning, would have been the top of that fill. That's where you place that line. So we got in it, test, test, test. You're super bullish, and then it goes, and it just goes straight up, and it tests it, and you're looking to get out at 1640. You don't care. You're not trying to predict any of these moves. You've made a lot of money. Predicting the stock market is hard. Most people would say that's impressive if you're able to do that. So you're looking when it breaks above it. Test, test, test. You made a lot of money right here, and you collect what your setup is. So once this breaks above it, you don't care. You could care less what goes on. This thing could fly forever, but you've made your money for the day. You've made your predictable move on the gap fill. And then, of course, once it breaks back below it, I would have been looking to go short. And what if you would have messed up right here? Like, because I like to use 5-minute candles to say if it's confirmed. Well, think about the psychology. So I went long here, collected profit, and I looked to buy puts right here. This is my line. Well, these are 5-minute candles. So I'm sitting there for, gosh, what, 10 minutes here? And this thing's not selling at all. Notice that these wicks are very, very small. This thing's hardly getting any selling. Well, if you're looking to go short and there's not any selling going on, not any dropping in the price, well, then you'd probably want to feel kind of uncomfortable and be looking to get out. And so that's a good say to use the psychology and exit your position. And then it went back above it. And so then you would have came back the second time. You don't have a candle on the 5-minute break below it. And then look, you do right here. And so I would have said, okay, you might have even lost a little bit here, but you should have seen 10 minutes with no selling going on that, hey, probably time to get out of my short. This thing isn't going to sell off. So you broke back below it here, and you're watching, you're seeing if there's selling going on. Well, red candle, and so you're like, okay, I'm a little bit more comfortable. I have this place is my wrist now, and so you're just going to hold, and you do, and you hold the rest of the day, and then it really starts to take off down here, and then, oh, you have this line from earlier, so what would you do? You would collect your profit, because these support and resistance lines, they're turning points. They are significant places. This means that when it broke back below it, the highest probability thing for it to do is to go down to the next support line. On the opposite, when it breaks above this resistance, the next resistance is the highest probability move. That's how you're using these. And so it breaks back below it, and then of course it ends up resting right here at this candle that you drew earlier. That's why I think some people think that those are kind of random. That's why I usually draw those candles right there on the body of the first candle if it didn't go in the direction I'm wanting it to for a gap fill, because when we break back above it, it's a good sign, and those are significant. They come into play later on usually. Alright, so let's erase all these and see if my chart will let me go any further back in time. Okay, so same thing again right here. We're going to say that this is where we're at, and this is where we're at in time. And we're looking to predict a move. What can we do to make some money? Alright, so you have the body of this first candle, and I'm looking to place a line right there. And it says, oh, well, that's just a wick. That's not really a body of a candle. That's not. Nothing's really happening here. We've turned around, but I don't really have my signal. Alright, then you have the body of a candle right here, and you have a little bit of the body of the candle right there. So that means you had, it's roughly 10 minutes right there where you can get into this thing. You're saying, okay, it's above my level. I would have hoped in 10 minutes above your level, you realize it's above your level. And so then you jump in and you go to where should your target be? Your target should be the gap fill. And so you're looking for it to fill the gap. So you have from here, your line from the body of that candle, and look, it just went perfectly. It's all green up until the gap is filled. And then you're out. People ask me, what is Amazon doing after that? It filled the gap. So I've taken my profit. And on the gap, the way the probabilities are set up is you have a gap fill is the highest probability, and then probably the next move off of that. So gap fill is the highest probability, and then the next highest move would be a reversal where the gap fill was. So gap fill and reversal. The gap fill is higher probabilities than the reversal, but the reversal is also pretty high. Okay, and so then you have the reversal. And so you're looking at the body of the candle right here. All right, it broke below it on the body of a candle, so I would have went short. It came back up, and my 1655, it held. So what does that say? Kind of the opposite of what I said earlier. You have a really good setup here because it broke back down below it, and when it came back up to that price, buyers did not come in. Sellers or shorters did. And so that's perfect. That probably, if you wanted to, maybe you could double down on that. But anyway, you can see right perfectly there. It didn't break above it, and it's just resting there. All right, and it does have some wicks that come down pretty good into that gap. And the body of the candle starts going down there, and you still have movement down. And then you just have this huge sell-off straight down, and you take profit at 1645 on your puts. And then you're out, right? You've made your money. You were long for this, and you were short for all of this move. And you're done. You don't care what happens the rest of the day. And really, it was rather boring because Amazon just kind of went sideways the rest of the day. And so that's how you use these. You're not trying to predict every move. You're trying to predict high probability setups, and then you play those high probability setups for your plan. This is why you have a plan. You don't just do the old hope and hold. And so this will allow you to make a good bit of money if you do this and you're disciplined. Let's see if I can go any. I can't really go any further. All right, so we looked at what do we look at? The SPY, Amazon. I can see about the DIA, ETF. So here, did never come into play, but where would you have placed your lines? You're looking to see if it's going to fill this gap down. That's what you're worried about. It tested the level, and that means buyers came in, stopping the gap down later on in the day. But the body of that candle, the bottom of the body of that candle, and if it did enter the gap, your place where you would take profit would be right there, where the day was before. But all right, let's see if we can go further and look for moves. And this is not all the ways that I predict for these is only gap fills, but I'm just trying to start with the easy stuff so that most of you would get it. All right, so we had right here, I believe, yeah. So what do you see? You see that we gap down, and so where's your target going to be? You're going to place this line right here, and I'm just really trying to ingrain gap fills on you because that is the easiest thing. I'll do another video on more advanced, I guess, support and resistance lines. All right, whoops. So this level right here, the body of that first candle, I always place those on the body of that first candle. All right, and so you got to remember how these start. This means that the open of this candle is 273.81. This is below your red line, so you would have seen the price going up this whole time. So once we broke out above it, on the body of the candle, you're looking at your price target right here. And so it goes up, doesn't really hit it, you know, kind of goes flat across right there. And I'll just do one like intraday. If you were asking me where's a good place that we might have trouble, just right there. We didn't break above it for a while. It's where the end of that rally was, that little rally. It was significant. And so that's where I would have one. Once we finally, well, where do we do it? Broke out above it. You can came and see we tested it. Didn't really go that hard. So that's how you kind of do those intraday. I'll focus more on those later. But on the gap fill, that'd have been your target. We entered it. We go sideways for a while, and then oh look, you can kind of tell we have the sign of the reversal right here. It's a good place if you want to place a support line on those type of candles right there. And so we hit that level where we have those reversal candles, and we sit for a little bit, and then we go. And right here, well, right there at the top of that candle, and right here on these wicks, and then it finally goes above it right there, you would take profit. And so what have you done? Well, you've predicted a move from 237 to 239 on an index. You would have made some money, especially if these weren't intraday options, because the time decay would have been lower. And so then once it breaks above it, that red candle where it found support was right there. And then finally that broke and yet a hard sell-off. But that's kind of how you use these to predict these moves. And really, what would you have hoped for? Well, if you're me, you're also looking for that reversal too. So I took profit, and then I'm waiting. I'm like, you know, is this thing going to come back down? And it does. We get this nice little reversal pattern right here, and we're resting on this thing. I'm waiting to enter my short. And then we do right here, and we go short. And then, oh, look, you got like 30 minutes, or 5, 10, 15, 20 minutes right there where you can collect for a profit. And I guess you do even have 30 where you can make a little bit. All right, and so you didn't capture, you know, you can tell with these green candles right here, it's reversing. But that is kind of how you use these, and you also use like risk management to play this stuff. I'll do one more, well, if I can. All right, so you have another day right here. I'm telling you, these gap fills are easy. Easy money. So I'm looking at the body of the candle since we went in the opposite direction. And kind of maybe where I would look to step in. All right. And so we're down below this thing. We're down below it, and we get break above it right here on the body of a candle. All right. I'm looking. Nothing really happens. We go below it. These two are not bodies of the candle. Then we break above it right here on the body of a green candle. I don't say we break above it right here because it's a red candle, so that's still selling off. But we break above it right here on the body of a green candle. So I'd be looking to go long. And where am I looking to go long to? I got my target of where the gap fill is. And so we go up here. You didn't quite hit your target. Hey, if you had seen that reversal, you could have collected profit here. We come back down. And so you manage your risk again. You're out. Haven't really lost anything. Just lost your time, I guess. And so we break back above it again. You're looking to go long, and then look, you pretty much got your paycheck. As it moves, it goes horizontal, and then it fills to that line. I mean, Not perfectly, but just off a couple of cents. I don't ever hold a trade overnight anyway. But that's how you use these. And it is kind of rough. It isn't perfect. But I mean, like, if you've been looking in the chat room that I've been friends with, you've seen I've been using these and I've been making money. It's not perfect. It's not clean where it's going to work every single time. It is hard. And you do have to kind of read it. And that's why you have to control your risks, because you're playing probabilities. You're not playing, they're probabilities. They're not certainties. And so real quick, I just want to go back like on the SPY and show you one more of how significant they are. You can go back on the SPY and go to the 5-day. Right, and so if you go back to where was this fun week, if I can see it, I guess it was on the 10-day, where we had the big rally days. All right, and so I'd already drawn it because all right. So we have the top of the gap fill. All right, and so you're looking to see what you could have played. You could have drawn on the body of that. Well, this is a 15-minute candle, so I don't know how it would have been on the 5 on that candle. And look, came back up to it, sold off. Came back up, you would have lost a little bit of money, but you would have been smart and you would have got out. So it went back down and then it broke above it, and you can make a lot of profit from here to here, and then you get out. If you're just really feeling it, you could have gone, but if I'm being realistic, I would have probably got out, and you would have made a ton of money right here, because that move is in a short period of time, $3 on an index. If you had call options, you would have made a lot. All right, and so then this level, of course, it comes back down and finds support at the gap that you broke earlier. And then later on in the week, once we get down to here, you find support at this level. All right, that's how significant those are. That's how much they play. They don't predict every move, but they predict a lot of them, and they predict a lot of them rather accurately. So that's just kind of an introductory. I could go a lot more advanced into it, but I assume you're going to have a lot of questions and say, like, I'm sure I'm going to get questions like, oh, hey, this didn't work at that time. Like I said, it's probabilities. It's not supposed to work every time. If you can predict, with 65% accuracy, and you manage your risk, you should be incredibly profitable. And I do mean incredibly profitable. I mean, this move right here would have been probably over 100% because it happened so fast. All right, this right here would have probably been 50 or 100%. You get 2 of those 200% moves, you're doing pretty well. So control your risk. Try to learn at least how to start using support and resistance lines. And then maybe a little bit after this video, I'll come back in and kind of show y'all more advanced ways to use it and how you spot a lot of these reversals and stuff intraday for scalps or something like that. Like for instance, intraday on this one, where the high of day was pretty much on that candle right there, and it came back up and tested it, and then boom, right there, and right there, and right there, and right there, and it rested above it, right there. That's kind of how you do this stuff. So you're looking for significant, important levels that you can play high probability moves on, and if you control your risk, you can play out those probabilities like a casino, like I've talked about in the past, and therefore you will be able to make profit. Hopefully that helped. I'm sure that was confusing. Kind of figured it would be, but let me know.